I'm going to cut straight to the chase and I'm not going to waste any of your time. Are you tired of losing money in the foreign exchange market? Listening to outside voices telling you to trade MACD, RSI, Fibonacci retracements, fundamental data. But what does that cause you to do? Jump from system to system to system. In my 3 years of trading the markets, I have found that less is more. Adapting a simplistic approach to trading the markets allows you to sustainably trade them. My name is Mike from CapitalHillFX, and I'm going to show you exactly today how I profitably trade the markets. Buying at support, selling at resistance. It's super, super simple, and it only focuses on 2 key aspects of technical analysis: market structure and price action. If you're a new trader here, welcome. I post a lot of videos that regard the foreign exchange market. I really hope you like it here. Please like the video if this actually helped you in your own trading journey. So we're going to back test one currency pair, and we're going to do like 5 different trades just so you get a better idea of how I trade my own system and how I'm actually back testing. So I'm just going to close my eyes and randomly select a currency pair. So we have CAD CHF. So what I'm going to do is I'm going to start off on the smaller time frames, like the 5 or 15-minute time frame, and this is to eliminate confirmation bias. We're going to remove all the drawings, and then we're going to scale in really, really close to the candles. And then what we're going to do is we're going to go to the higher time frames, like the daily or the weekly time frame, and then we're just going to scroll back. This sort of avoids any confirmation bias because you're not looking at any of the previous data that has taken place in the market. So we're just going to scroll back to I don't know. We'll do August 4th right here. That's my brother's birthday, so it's a special day. So the daily time frame, now we're going to scroll back, right? And like I said, we're just trading bounces off of daily horizontal levels. So on the daily 12-hour time frame, we're going to identify these significant structures in the market. And then on the smaller time frames, like the hourly time frame, we're going to identify the price action. So I could already off the bat keep it super simple. Identify a couple different horizontal levels that price could potentially react with. And there are 3 different pieces of criteria that I utilize to outline these support and resistance levels. I'm not going to get into that because we're just going to keep it super, super simple. If you want to know those and go more in depth to them, I have another video about that. But right now we're just going to keep it super simple. So if price pushes up to this significant resistance level, I'll be looking to sell. If price pushes down to this significant support zone, I'll be looking to buy. It's literally as simple as that. So we're going to go down to the hourly time frame and just wait for price to push into one of these significant horizontal levels. Right now, you can see we're floating through substructure. So usually we would like place an alert around these significant horizontal levels just to make sure that we're notified whenever price does come to one of the structures. But in this case, we're just going to be clicking through all of the candles and just making sure that we execute on the probable setup. So I'm just going to click through these candles. We can see we're beginning to push into the zone. What I usually like to do is I usually like to identify a smaller structured zone within the zone just to get a better idea of where I want to see price exactly interact with. And we can see we do have a nice little smaller structured zone. I want to go back to the 4-hour time frame to see where we previously rejected away from, and we could see this zone actually was well respected in the past as well. So I want to see price dig a little bit deeper into the zone before actually seeing upside movement. And this is very important for a lot of people because they outline significant support and resistance levels, and then it bounces off the top half of it, and they're like, yeah, no, we're getting the bullish price action, right? So they place a buy right here with their stop loss below the previous wicks and their take profit at a 1 to 2 or 1 to 5 or something like that. And then what ends up happening, price digs deeper into the zone, fully tests the zone, stops you out, and then heads in the original direction that you anticipated. And then you like just want to stop trading, right? So to try and avoid that, outline the smaller structured zone so that you know exactly where you want to see price retest and interact with. So this seems like a pretty good zone. I'm going to wait for price to push fully into this zone before looking for that upside movement. And we can see we're beginning to form that bullish price action. What is bullish price action? Bottom heavy wicks in the position of the real body near the top of the candle. We can see we don't have many bottom heavy wicks, but we are forming a lot of bullish price action. I'm going to wait to see if we could push a little bit deeper into the zone. There we go. There's a very nice deep push, but we can see that we just followed with a very strong bear candle. Let's see if we could still push away with some bullish price action. And it looks like we just absolutely violated the zone. So this is why it's very important to read the price action before you're actually entering any position. You need to be able to wait for the candle closures before you're actually entering any of your positions. So usually when we break through significant support or resistance levels, we hook back to test it as the opposite structure. So we were testing it as support. We could potentially come back and test it as resistance now. So what I'm going to be waiting for, I'm going to be waiting for price to hook back, come back into this significant horizontal level, wait for bearish price action, and then look for downside movement. And I'm still utilizing that smaller structured zone that I have outlined right now. And remember, we're on the hourly time frame right now, just keeping things super, super chill, super, super simple. So we're beginning to push into the zone. We formed a nice bear candle. I'm going to wait for another push away from the zone before actually identifying this as a significant resistance level. Because multiple rejections is way better than one, right? And it's very important when you're trying to identify or validate these horizontal levels. You want multiple rejections away from the zone just to validate that we have a significant resistance or support zone. So we could see we had sort of a double top. We tried to wipe out the highs, failed, came back, tried to wipe out the highs yet again, and we failed, and then formed this nice bearish candle, nice bear impulsive candle. What I'm going to do is I'm going to place a sell order, take profit, or excuse me, stop loss right above the zone. Take profit, we could do maybe a 1 to 2 if it makes sense. We'll do a 1 to 1.5 for right now, just because it sort of structurally makes sense. And then we'll sort of adjust it accordingly. Now we're just going to let the trade play out. We're not emotionally taking out of the trade. We could see we are creating higher highs and higher lows, which is sort of in a consolidatory fashion, meaning it doesn't look like an impulsive move towards the upside. It looks like it's more of like a consolidation back towards an impulsive move towards the downside. Let's see if we could end up pushing. The zone is still holding. And we end up pushing towards the downside exactly like I anticipated. Again, no emotional trading decisions. We're just objectively reading the markets and trading bounces off of them. It's super simple. So now that we hit take profit off of this trade, we're going to put plus 1.5 R. And a lot of you may be asking, Mike, what the hell is 1.5 R? What the hell is an R? So an R is just the unit of reward. It's what you're risking on the actual trade. So let's say you risked 2% on this trade. Well, you would get 3% back, right? Because 1.5 times 2%, or let's say you're risking $2,000 of a $100,000 account, which would be 2%, you would get $3,000 back. But let's say we got plus 2R, just to make it way more simpler. If we risked 2% on that account, we would make 4% back. So a unit of reward is basically just the multiplier of what you're risking on that exact given trade. So we can see this would be plus 1.5R. Now we're going to go and look at the next daily level. And what was that? Just a break and retest of a significant horizontal level. That's all it was. The next level that seems pretty significant in my subjective opinion is this level down here. We can see we're already beginning to bounce here, right? But I'm going to outline this zone just because it seems super, super simple. We're going to go down to the hourly time frame. We can see we're beginning to form a bottom heavy wick, but nothing crazy yet. We're going to wait for some more bullish price action to form. And we could just see right off the bat, and this is just super simple. We pushed into the zone, formed the bottom heavy wick, and then the next preceding candle was another bottom heavy wick. I mean, this is pretty simple as a buy order. I'm going to wait for another candle just to validate that we're going to respect here as support. Yep, we already formed a bullish candle, which would make me sort of enter a buy. Again, bottom heavy wick, try to wipe out the lows again. We formed another bottom heavy wick, and then we proceed with some bullish price action. I'm going to place a buy with the stop loss below the previous wicks, maybe at 30 pips, and then the take profit at a 1 to 1.5, sort of the same risk to reward ratio. And again, you could test with a bunch of different risk to reward ratios, whether they be fixed or just targeting the next structural low or high. That's what backtesting is for, to optimize your risk to reward ratio and to optimize your entries. Another thing is a lot of people try to not lose in backtesting data. It's very important that you just let the backtesting data play out. Even if you lose your trades, it's very important to not manipulate that. That's what the data is for, is to, if you lose, make sure that you're optimizing the trading setups and leveraging it in future data. So we can see this hit take profit yet again. So here's another plus 1.5R. So if we risked 2% on this, we would make $3,000, or 3%, excuse me. If I risked 1% on this, we would make 1.5% back. So we could see a simple break and retest of a significant horizontal structure, and then a bounce into a significant structure. Just literally super, super simple. Let's see if price comes back into this significant horizontal level. We did. We came back into this horizontal level. Let's see if we start to form some more bearish price action. And again, bearish price action is characterized as top heavy wicks, position the real body near the bottom of the candle. We can see we're starting to violate, push really deep into the zone, And now we have that bearish impulsive candle. I'm going to get rid of this smaller structured zone. I'm going to place another sell around this significant horizontal level just because this looks like an evening doji star. And for those of you that don't know what the evening doji star is, it's just a bullish impulsive candle into the zone. Then we have a doji candle to proceed. And then we have a nice bearish impulsive candle to push away from the zone to identify a potential reversal in the markets. I'm going to put my stop loss above the zone, take profit at a 1 to 1.5, keeping it super, super simple. And if it stops out, who cares, right? Push a little bit higher into the zone. I'm still waiting to see if we can get that bearish push towards the downside. And again, we're not emotionally trading. We're just letting the trade play out. Take its course. Who cares if it stops out? It's not that big of a deal. Looks like we're consolidating a lot around the zone, sort of moving sideways. This sketches me out that we're moving sideways a lot around the zone because there's no clear intent with direction, but we'll still let this play out just for the sake of the example. A lot of volatility, a lot of whipsawing in either direction. And these types of trades you'll probably want to take out, yeah, because something like this will happen. But just for the sake of backtesting data, we'll say that we stayed in this trade, and we'll say -1R. So -1R. So this means if we risked 1%, we would lose 1%. If we risked 2%, we would lose 2%. Whatever it is we risked, we would lose. So that concludes the backtesting data. You could see out of these 3 simple trade orders, a break and retest of a significant horizontal level, a bounce into a significant horizontal level, and then a bounce into a significant resistance level, we would have yielded 2R off of these 3 different trades. And how simple was the trading system? You don't need to implement all these different nuances to become profitable in the foreign exchange market. You could literally buy at support and sell at resistance, and it will end up working. I'm Mike from CapitalHillFX. I'll see you guys in the next one. Cheers.